So, Frank, we know that brokers represent 11% of the market right now, and
Correct.
it's going to go up.
Yes.
So 2018, we're going to call it the rise of the mortgage broker.
Nice.
Brokers are coming. Remember when it was like a synonymous term for everything that was horrible in lending?
I
The
do.
broker got blamed for it.
They were
It
the
could be a
evil
banker.
people, yes.
Right. It could be somebody who robbed a bank that had to
Right.
be a broker. Somebody who like slapped your kid that had to be
Right.
a broker.
Right. Yeah.
Well, brokers are coming back big time because it's cheaper to bring a loan to market through the wholesale channel. Remen Wholesale is looking for experienced account reps. So
Right.
if this is you, if you've gotten out of it, we'll want to jump back in because there's great opportunity. Remen is a killer company to work with. So click this banner for experienced account reps right over there. All right, so Dodd-Frank was rolled back late last week.
What?
And here we are on Tuesday, and the housing market, it hasn't crashed yet.
didn't?
No, there's no rioting in the streets. Wall Street didn't throw a party or a parade. So why are the likes of Elizabeth Warren on the warpath right now saying things like, I don't understand how anybody in the United States Senate could vote for a bill that's going to increase the likelihood of a taxpayer bailout. So much vitriol and hyperbole here. It's just crazy.
Oh my gosh. I mean, consider this. If there's one group of lenders that did not play a role in the bailout, it was the credit union.
Right, they're too conservative.
That's right, seriously. Go into any credit union, and they wear it like a badge.
They do.
We don't do all those risky loans. Heck, we just had Travis Federal Credit Union in here last week, and they found a way to bring that up. And they should be proud, really.
Do you remember that, though? We were talking about marketing, and they're like,
Right.
well, we're very conservative.
Right.
We didn't do all that stuff. You always hear
Right.
this from the credit unions. Now they're right. So, would it surprise you to know that the National Association of Federally Insured Credit Unions are singing the praises of the Dodd-Frank rollback? Now, why would they praise this if it's going to mean a return to risky, crap loans that will shuttle in the next dark age, right? Well, there's a simple answer for this.
Yeah, it's not going to happen.
Ta-da!
Or at least from this bill.
Nope.
Why is that? Well, here's your first
The
reason.
first reason is we did not roll back Dodd-Frank. Yeah, we didn't roll it back. We replaced it with the Economic Growth Regulatory Relief and Consumer Protection Act. This is the one that Hensarling was doing and Crapo were doing. I can't believe they finally got this thing through.
Got it, that's right. We replaced the bill with a less restrictive, more consumer and small bank and credit union friendly
Right.
piece of legislation.
Now, the reason the credit unions like this is because Dodd-Frank had a one-size-fits-all approach to its policies that it passed. So enforcement for large banks, well, that was the same as for small banks and credit unions. The unintended consequence of this approach is that the little guys, they couldn't compete. They could not afford the high costs required through the policies with their smaller production levels. And this is the main reason that we saw the death of the new bank formation over the past 9 years. And make no bones about it, guys, the lifeblood of our economy runs through the small banks.
That's right, they do. We bank with a small bank.
Yeah.
I mean, for goodness sake. Or to put it another way, the replacement bill will make it easier for small banks to compete. And that's not good. That's Tony the Tiger great.
You're right, and what's that question for us is, what is the impact on the qualified mortgage? We don't know that yet. What will become the fate of the Consumer Financial Protection Bureau? And of course, non-QM loans have already become quite the rage, right? And is this going to lead to more and aggressive non-QM deals? And finally, will a more lax regulatory environment lead to the rise, as we said earlier, of the mortgage broker? Now, I think the latter two, Frank, here are foregone conclusions.
Okay, so to be clear, the Consumer Choice Act, which replaces Dodd-Frank, is not a return to the good, bad old days, right? Where anyone and everyone could write a risky loan.
No, far from it. And it does ease the regulatory burden on lenders, which will bring down lending costs, which in turn will allow lenders to lend to more people at better rates.
Yeah, and keep in mind, those hurt first and hurt the worst are the low income and underserved communities. So, with that logic, the ones who should feel an ease in lending the most are those same communities. And we can all get on board with that, I would hope.
This is one thing that nobody really talks about. Okay, so consumer protection, it's great for you because you got money and you got money in the bank.
Right.
Okay, this is disproportionately hard on underserved communities,
Right.
many of which are minority groups.
Right.
And so these are the ones who we've been hurting. So having a little relief in terms of regulation here, which is going to lower the cost, It's going to allow banks and credit unions to offer more products, aggressive products for those communities, and everybody can get on board with that, right?
I would hope so. Apparently not Elizabeth Warren.
No.
So
she only wants to lend to rich people.
Right.
You know why? Because she's rich.
She doesn't want a lot of small banks. She just wants the gigantic banks.
Right.
That's what she wants.
Under her thumb.
Right, under her thumb. So with that, leave us your comments down below. Do us a favor, forward, share, and subscribe. We'll catch you guys later at the National State Post.
Later, skaters.